Okay, we live. Live. Me too. So, um, I want to show you guys my my favorite ICT strategy. You can see AMD PO3. I look for this almost every day, except Monday and Friday that I don't trade. So this is my favorite strategy that I use in the forex market as an ICT trader. So what what actually is this picture right here? So you can see that this is a accumulation for those who know ICT PO3 AMD PO3. So this is an accumulation, this is the manipulation, and this is the distribution. There's a two scenario that I use. This is like what I've backtested and I've understand from the the concept. So as in most times the accumulation acts as initial highs and the manipulation acts as London making a highs. The accumulation acts as Asian range and the manipulation acts as London highs, then distribution will act as New York expansion. Same thing here. Asian range, Asian range, manipulation as London's, then distribution as New York. This is for the bearish. If you can inverse scales, you know that if you can inverse scales, you know that Asian range makes accumulation, manipulate to the downside and distribute to the upside. So now there's a different scenario, and I'll show you guys on my Notion because I have this. I've put on it from the month of May down to down to today, down to August, down to this month. I've been using this for a very long time. I've been using this setups, this concept for months now, 3 or 2 months now, since I learned it from ICT. So this is AMD+PO3. You can see that if you look closely, this is the open of the range, the high. Here, yes, the open of the range makes the high, makes the low, and close. The open, high, low, close. That's the PO3. And the AMD is the accumulation, manipulation, and distribution. Inverse scales for bullish. Accumulation down at this point, manipulation to the downside, then distribution to the upside. And now you can see they stated two scenarios at this point. So most times we clear Asia range highs, make a structural leg, like make a one structural leg push to the upside, taking buy side liquidity when we are about to look for short, taking buy side liquidity and breaking market structure, trading back to the PDRE, maybe the ICT PDRE, then looking for shorts. You get most times we take this is the first scenario that I use. Taking Asian range, making a structural leg to the upside, looking for entry using the PDRs and shorting. Then this scenario here is the second scenario is sometimes most times we take Asian range highs and make a failure swings. Then you can see these highs fail to take out these highs on the left hand side. You can see we took Asian range, we didn't make the structural leg up to the upside and immediately you drop down lower, making a failure swing then looking for short PDRs. Same thing as bullish. I wish I can look for the bullish part of this thing. Okay. Okay, you can see same thing. Same thing when you're going bullish. You can see same thing when you're going bullish. So now this is not in my chart. I could have put it on my chart, but I'm just giving a picture. So you can see structural leg to the upside, look for PDRs to short, structural leg to the upside. Just taking out Asian range, dropping lower, making failure swings and looking for short to the downside. Then you can see the standard deviation. This standard deviation acts as the target. This is where we target standard deviation the minus 2.5 standard deviation. I wish I can show you how to plot the fib. Okay, let me go to my Notion and show you the trades I took using this. So you can see AMD+PO3, 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 NY, New York, London, NY, London, England, London, blah, 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 blah. You can see I've been winning massively. It has been a win, 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 win. We also take losses. We win, win, take losses, win, win, win. And okay, okay. My last trade I took was on August 13th using this. So now let me put. I also use other strategy, but since I learned this, it has been a very game changer to me. So now this trade was on what date was this trade was on May 28, 2025. You can see the the indicator was not like well shown. So let me use my chart. May 25, May 25, May 25. Oh, my chart. 0 years, right? I want to make this long because I want to put on the kill zones. So if you want to enter the trades, I want to put on the kill zones. May 28, 0 years then. May 28, May 28, June, July, August, June, July, May 28, May 28, May 28. Can I go down to May 28? I'm not using a premium account. I don't think I can go down lower. But also, if I can't go down lower, May 28, I can't go back, I can't go down. Only June, I can stop at June, I can't go down. So now, let me use this stated, but you might understand what I mean. You can see this low that they put on X. The low that they put on X. Yeah. So that low is an Asia range low. If you look closely, my wicks are not too showing. But if you look closely, you can see that we just took Asian range highs. Then there was a high with the buy side liquidity resting on above. You can see highs there. So this low was Asian range low. We swept it and we went. Did I have this picture? Okay, let me just continue. So we took Asian range low, then broke structure to the upside. That means we are now bullish. We are looking for longs. So we broke structure to the upside, trade back to a CISD. I see CISD there. This is our 3 consecutive down close candles. I trade into a CISD and I look for longs. So my fib was from this low to the highs that I took the buy side liquidity that we broke structure. So maybe I'll state how to plot it, because I'll go back to August 13th and show you how I used the fib to look for targets. Okay, that'll be fine. So the 2 buy side liquidity, swept Asian range lows, 2 buy side liquidity, signal to us that we are bullish, and trade to CISD, and that was a TP right there. Going on to another next, going on to I think I put a comment on that. You can use Notion to also track your trade. You can see M15 Asian low taken out by London section, and we got an expansion during London New York event. That is FMC minutes. So you can see trade on FMC minutes. On the higher time frame, we had an FH that was already been used before trading back to it. On the higher time frame, we had an FH that was already been used before trading. Those type of FH lacks volume and are low probability. Yeah. FHs that have already been traded on, they have been traded to before moving, that are low probability. So we need to look for clean FHs that have not been raided or something like that. I'm offline. What's going on? Looking tired. John. The next one is John. Oh God. This network. Sorry. I'm having some network issues, but where did this thing now touch you? It's really fucking me up. Okay, the next example, the next trade I took was June 15th. Oh, it's the same as that one. Okay. Okay. Okay, now yes, it's being clear stated very well. You can see through my chart. This is my favorite setup, favorite ICT concept. And that will be the title. My favorite ICT concept, AMD+PO3 as a day trader. So you can see Asian mix this is Asian range. You can see an X. You can see an X right there. And next we took Asian range low. Almost same thing we just looked at during May on Euro USD. So we took Asian range liquidity. Was it the same trade? Okay, June 15th. So we took Asian range low. Yeah, you can see the Asian range Q zones. Took Asian range low, broke structure to the upside, and retreat back to an OTE, ultimate trade entry. You can go to ICT YouTube channel. You're gonna see stated there the OTE. So go and learn OTE also. So we changed to an ultimate trade entry because I plotted my fee from the lows to the highs. Got an entry at 0.62 ultimate trade entry, and price went to 2.5. Now I can see, if you can see clearly also, I dropped my fee from low. I learned it from TT trades. From TT trades, yes. You can go on YouTube also and search for it and search for him also. So I plotted my fee from the low to the highs. Then I got my 2.5 standard deviation. And there was a target and price hit my TP. Going on to the next one. I want to make this thing. This one is a short. See, they're on London. I took all those trades on London session. This is GBA, the April 8th. April 8th. The month of April. Okay. My Q zone was not on right here. You can see I'm having showing blah blah blah. Don't showing it as of them. As of then, as when I took this trade, you can see Asian made a range. This was Asian highs. We took Asian highs. If you look also, we had that one structural leg that I showed you guys during the start of the video. We had a structural leg to the upside, taking buy sell liquidity, then expanding lower, taking the lows, the recent lows. If you look, if you can remember, you can go back to the video and also check. After taking Asian range highs, we had a structural leg to the upside, then drop very quickly, taking out the lows, breaking structure, then price head to an FEG at this point and expanded down to 2.5 minus 2.5 standard deviation. Very easy. This is very easy to spot. What was the comments? Asian range high was taken out. We didn't get a structure shift. We didn't get a structure shift immediately. The price moves upwards, giving us a structural push to the upside. And coming back to the range when price takes Asian range highs or lows. Don't expect the breaking market structure immediately. Most times we could push lower or higher a little bit before we could come back to the range. That is some long stuff. So let's continue. June 4th, 2025. All these are taking this year. I don't want to make this video that long. Be good. Okay. You can see also Asian range. Let me see, this is more clearly. Wow. Asian range, we took it. You can see an X. That X means liquidity for me. So you see an X, we took Asian range low, set Asian range low, broke market structure to the upside, price move. It didn't come back. They didn't even tag me immediately. So we had London expanding without coming back to me. Why I took this share was that we didn't like go to the 2.5. So when price this structure and head to the 2.5 immediately, I will not look for any trade because that's where my overall target is. So I waited for price to drop back to a CISD during New York section, and that was where we got an entry. A New York section, and I long from here, targeting 2.5, and you see price went immediately to the upside. This is so simple. If I can also, my next video also can still go through and also teach how I also look for this. So that was on GPS on June 4th. Then on USD Swiss franc June 11th, I also okay, that was a long on GBPSD and now a short. So you can see right here. I love this trade. This trade is very it's looking clean and sweet, bro. Very sweet, clean and sweet. So we have Asian range. We have Asian section giving us a range, and it was the highs. Asian range highs out of liquidity always. So we took out Asian range highs. Make it like we made the failure swing. You can see this highs here. You can see this highs also. These highs at this point failed to take out these highs. Then we had the structure sheet, and also CISD price pushed up to the price tagged me on the CISD. You can see the midpoint, and I look for shorts and target 2.5. We have CPI, that's why I was targeting -4. We have -4 and we have -2.5. When I have those high path moves, I leave to open my trades. I leave my target at, and I leave all my targets at 2.5 or the midpoint from the range, in the middle of the range from 2.5 to -4. That's how I actually do most every time. But you can see this CIC was being tagged. I think I was tagged already. Okay. I entered in the midpoint of the CIC. As I enter, I see the shots from there targeting 2.5. Then that was on New York City. So what actually happened here? I think if okay. I think this one is. Let me use this because okay. On GPS, what actually happened here? Now there is like that's why I backtested I spend my whole time backtesting this concept because it's really it has a good win rate. To be honest, it has a very good win rate if you're doing the right thing. So right here we took a change highs and we dropped lower. Like we dropped lower. There was a buy side liquidity resting above the size. We took the buy side liquidity, and after price taking buy side liquidity, I was expecting like you sort of wait for the lows at the sell side to break market structure. And what did I do? I started looking for a failure swing instead of waiting for the lows to be run out. I looked for a failure swing and I took a short trade using failure swings, and price ran to my stop loss. Now understand what I'm trying to say. When you have the structural led to the upside after taking Asian range highs, what you're supposed to do is to look for the lows to be run out. You shouldn't look for failure swing. When you should look for failure swing is when we just took Asian range highs. You can look for failure swing. But when we take Asian range highs and have a structural leg to the upside, you should not look for a failure swing. What you should look for is look for the sell side. After taking buy side, look for sell side to be run out, breaking market structure, and look for entry to short. That's why I launched this trade. You can see that this trade is very different from the ones I've shown. Okay, on August 13th, I took a win trade on EURUSD, shorting it. I posted that trade on my YouTube channel. You can see if you go back, I posted that trade on my YouTube channel. I posted that trade on my YouTube channel. I go on July 10th. I took a trade on July 10th. I made almost $40. using it. GPPSD. Let me show you from the chat. GPPSD.
How much is system? Is it? I'm serious.
Come up, bro. Okay, I think this is it. July 10th, okay. It's right here. Very right here to the trades. Let's navigate to the point and show you what I looked for. Okay, removing all these makeups on my chart just to show you guys what I actually look using this my favorite. It's actually my favorite right now. So right here we have Asian range highs. See Asian range highs been taken out, and we have also right side we had a structural leg after taking Asian range highs. We had a structural leg to the upside. Now what is to look for? We need to wait for the sell side to be taken out also. That's what I see, right? Look for the sell side to be taken out. Now have a structural shift with a full body candle, not a week. A full body candle taking out the sell side. So after taking out the sell side correctly, they had these two consecutive candle out as the CISD. So what did I do? What exactly did I do? I putted it out. There are sections, okay, there are sections. You can see the midpoint. Now I don't enter based off outside my section, so I only entered the trade when price. It's a time and price, yeah, time and price. If it's London, I look for price to get my PDRs at London section. If it's New York, I wait for price to get my PDRs at New York section. I don't trade outside my windows, like I don't trade outside any of my Q zone because they are low probability entry, very low probability. I see this candle trading up to my CISD during London section, and from there we tanked to minus 2.5 standard deviation. And this is showing you in the live chart. I took this trade and I journaled it on my Notion. I took that trade and I journaled it on my Notion. So I'm having a slight network issue, bro. I think I'm very fast with this. This video is getting longer. 26.
Yes, your call.
I've lost. It's July 30th. I missed that trade. Honestly, it's the same thing, but I missed that trade. The same thing, but I missed it. Honestly, means agreed. That was the New York section. But this on July 10th was the entered based of London sections. Oh, come on, my bro, come on, my bro. Okay. You see Asian range highs run out, structural leg to the upside. And then we had a shot from that place. Targeting, okay, I'll show you how to plot it. That will not be a problem. So I see my stop loss at this here is the highs. Now let me put this on standard deviation. Now your fib needs to be at the highs, the last highs that were made after shifting structures. The last high we made and the lows and the last highs and the lows that we had. And this is the last high we had here. And this is the low. You can see here of my target. My target was actually price was like nearly coming to my stop loss, but when I look closely, we just ran out liquidity. As we ran out liquidity, we just tanked so hard to the downside. See, this is not a cliche. This is my favorite model, my very favorite model, to be honest. My favorite model. Screenshot this again, because I love this trade. It was very easy, and to be honest, this is very, like, when you see this, you cannot unsee it again. To be honest, you can't unsee it again, bro. You can't. It's very clear, very clear. What are you doing, bro? It's very clear, and I took the screenshot. The date I took the shot. The date is July 10th. Very bearish. So I'll be wrapping up this video. I think in my next video I'll also teach, like, explain more, because there's still more that I need to explain more. You should just tell me in the comment section if I should explain more. Yes, I need to explain more, but just give me his feedback on this vlog. Is it vlog? on this teaching thing. So see you guys. Wrapping up this. Bye.